What we are going to talk about today is we are going to talk about the new feature that we have recently launched, which is kind of become one of the most favorite features for a lot of people. And I understand why it is actually, a lot of people actually are loving this feature. Now, so what it basically is, you guys already know all these charts. I'm not getting into the details of every single feature of the platform. You people already are aware of it. This webinar is purely focused on what we could do with the new feature, right? If you want to know anything else, either you can have question and answers at the end, or there are classes that we keep conducting in Hindi, English, Kannada. So you can join one of them to understand how to use different aspects of this product. So with that aside, what we have is we always had ATM strikes. This particular data we all knew that at any given point in time it shows you at that time how does the call seller and put seller look like, right? It doesn't give you since morning till now how did it evolve. We do not have a delta in these bars, unfortunately. Even now we don't have it. We are thinking of adding delta, but we don't know when we will be able to release that. But for time being, the best way to see how the volumes have evolved over a period of time is using, when you click on that particular chart, you were always getting these lines, right? These were basically sell volumes, whether they are going up or down, etc. We were able to see this data till that time in that day, right? Now, because it's Friday today, we don't have market, so we are able to see it till 3:30. But on weekdays, if you are seeing it at 10 o'clock, you will basically see it till 10 o'clock, 9:15 to 10 o'clock, 9:15 to 12 o'clock, 1 o'clock, whatever. Now, this was something that we already had. What we have done to this feature is we have added, the first thing we have done is we have added alpha R to these lines, which means if you remove this call cell and put cell, now you are able to see exactly how they have moved using the alpha R, which is essentially a smoothed version of those lines. Now, because this is smoothed version, it is actually a little easier to understand. And we could say that at this particular strike, after a particular point in time, both call and put, they both were selling very, very heavy, which means none of them, as a buyer, you could not have made money in any of them at that point in time. And then somebody gave up at the end. Okay. Now, this is exactly what, it basically explains you, and you would be able to understand this very easily. Now, we have always told you that one point that is critical that you have to understand is we have always told you that if you are, for example, if the price is coming down, right? And let's say if you are in a position and you have exited, let's say, morning, let's say you knew that this is going down, you took a position. When this was coming back up, you made some points and you exited. Now we are at 25,050, or you have not taken a position. We are at 25,050. Now at 25,050, our view is bearish. In the morning itself, everyone knew that the view was bearish. So for us to understand whether the price will go down or not, the first strike that will give you the indication is it will be either 25,050 or 25,100. If the price to go down, if the price was supposed to be going down, the first strike that will give you a good indication is either 25,100 or 25,50. And on the other way around, if a reversal has to happen, because price is coming down, if the reversal has to happen, the first strike that will give you that indication is 24,950 or 24,900. One of these two will be the first one to tell you saying reversal is about to happen. Reversal is about to start. So remember that. And this is something that we have always said. And this is evident with our data as well, right? So when you look at strike-wise sellers data also, you will understand that, for any reversal, a crossover happens either at 900 or 950. And then a crossover happens at 25,000, 2550, 25,100, like that, if the price is going upwards. Okay, the first crossover of puts versus calls happens at 24,900 and or 24,950. If 900 is already secured, 950 is where the first crossover happens, and that is where we understand that, okay, looks like puts are strong now. The price is not going to go down. A reversal may be expected from here. That is what we all understood. Okay, I'll repeat again. If the price were to slide, the first strike that will give you indication is either 25,050 at this point in time or 25,100. A reversal was supposed to happen. If the reversal was to happen at this point in time, the first strike that will give you that indication is 24,900 or 24,950 from the bottom. For price to slide down, it will be from the top, ATM strike and one strike above that. That's how we have to analyze this. Okay, and the same thing you will actually use it to analyze from the new charts point of view as well. Now, 24,950, I'll just take an example and complete the explanation, and then I'll show you how we could essentially use it in live environment to our advantage, right? So, like I said, if you remove this, you have got smoothed lines. This actually helps you a little better. And if you are seller, let's say in the morning, 25,150 it started, leave one candle out, then you have got 25,100. But if I'm analyzing 25,150 because it basically is right above and price was somewhere there as well. So if I'm looking at 25,150, now 25,150, if I remove these two, morning, first thing in the morning, calls were stronger, actually decent. They are actually, the other thing you will understand is when a trend is supposed to happen, right? At the first ATM strike, these two lines will be on two extreme opposites. Maybe you will not notice in the first candle, but as the candle progresses, if you will notice them that they are on the extreme opposites, the chances of price going down significantly are extremely higher. If they are coming closer or if they are going closer, most likely the price is not going to travel much. That's because there's already a fight at the ATM strike itself. So chances of price going down significantly is very less when something like that happens, right? If they are on two extreme ends, the chances of the price pushing from that position is very, very high. So bear that in mind anyways. And you will notice that if you go to historical data, you will realize that whenever price has traversed 200 points, the first ATM strike, you will clearly see, a lot of gap between puts and calls or calls or puts, whichever direction the price is going. Now morning, if you are a seller in the morning, right? You already know at 9:15 itself that there is a gap, and at 9:16 also you know that there is a clear gap. Okay, and significant call sells are basically selling higher. This is the first sign that, again, this is something that we have told you before as well, that be a call seller because calls are stronger. Be a call seller and continue with call seller for as long as the line is growing, you will be in an advantage. Okay, analyze with ATM strike. If you want to take a position deep in the money, that's okay, right? Because 150 is there. If you want to sell, for example, 24,900 or 25,000, that's okay. But analysis has to happen always at the ATM strike. And the ATM strike calls are stronger. So you want to be on the call sell side. Okay. And since puts are at the bottom, if you want to be a buyer, be on the side of the guy who is at the bottom. Okay, that will help you analyze. That will help you. You know that, okay, these are weaker. Hence, maybe you will have better chances of buying puts than buying calls. Okay, as a seller, always be on the guy who is on the upside because they have got the more supply, and hence, essentially, its particular asset price will lose the value. Okay, now beyond these two, we have now also added one more thing called as show candles. Now, if you are a seller, the easiest thing for you to do is the first candle anyways are equal. You will not go get anything. The second candle, more or less, the top guy, it will pierce through. You will see a green candle. Whoever is at the top, second candle, more or less, you will see a green candle. So you can take an entry there. And then for as long as I'll remove these, for as long as these candles keep going up, for as long as the candles are maintaining a distance with the smoothed line, you can remain in your position. When they're slowing down, see the line is essentially now coming to is slowing down. When they're still going up, when it is slowing down like this, for example, now it is slowing down. You can understand that essentially the pressure is over, and maybe it's a time when you can liquidate your positions and take a profit and probably get out from that position at that point in time. When supply is slowing down, that is when you can say that, okay, more or less the position is over. You basically want to get out of that. Okay. Okay. So that is one way to analyze. As a seller, again, I'll explain. Look who is at the top, whether call is at the top or put is at the top. If call is at the top, what you need to do is you start selling that, and as long as they are maintaining the gap, you are in a good side. You can continue your position. You can continue your call sell position. Request everyone to please mute. Yeah. Please mute and don't unmute unless I request you to. I'll give you time to ask questions. You can unmute and you can ask questions at that time. So this is a way for you to easily be on the sell side, and obviously, sellers obviously have much better advantage, and you will obviously be able to, gain much better insight. A simplest way, if you don't want to look at any other chart also, this alone will give you a good insight. And then on the put side, now, if you are a buyer, and this is the best thing for you. For example, a lot of people said that they took this thing in the morning, but they were unable to ride the trend. A few people already messaged and said they were unable to ride the trend because they thought this reversal might actually kill them, and they kind of lost the move. So the point to all of them is, let's say that morning somehow you are not able to capture as well. The price comes down to 25,050. So let's look at 25,050. We always analyze the ATM strike. We are expecting the price to slide further, which means we want to buy put. Correct. So we will say show candles, we'll remove call, we will only analyze put. And look what happens with puts. One, in the morning, they were still trying to, at 25.50, they were still trying to, sell more, maybe because they wanted to hold the position. But then it slows down. Clearly, it actually slows down. And when the sell side, see, understand that in Indian market now, demand is always there. You always have demand. There is no shortage of demand. Retail investors are always buying. The point to analyze is when supply is slowing down. Whenever supply slows down, that is when your chance of making money as a buyer will be very high. So when the supply is going up, ignore. It's okay. Whatever happens to that particular asset, you can ignore. But when the supply is slowing down, that is when you can basically take a position. So you can actually buy at 949 is your first chance. And if you want to exit, let's say, this is your first chance. And then another chance is 1001. So there are two times when you could basically take an entry, because both the times the supply line is essentially either going sideways or it is going down. Again, understand critical part. When it is going up, if the candle comes down, ignore. Let this line, the smoothed line, slow down. While it is slowing down, if the candles are coming down, you take your entry. And you have got a very good stop loss. The candle is slightly big. So you can either say the high of the candle can be your stop loss, or the smoothed line itself is your stop loss. If a candle goes above, you will say that, okay, I don't want to take risk as a buyer. I want to exit here. But if the candle again comes down, because this is anyway smooth, you take another position, right? The candle went up, the line is not doing anything. If you want to hold, you can hold. But if you are taking stop loss and you want to exit, absolutely fine. Don't worry about it. You will not lose much, because the stop loss is very, very small. You will hardly lose 2 or 3 rupees, not more than that. I'll show you with example itself. And then you have got another entry at 1001. There is no chance you're not going to lose this, and you will make significant move from there onwards. So let's say we have got two entries, 949 and 1001. 949, worst case scenario, you're exiting at 952. Okay. So 949, let's see where we are at 949, right? 949, we took an entry at 114. Okay. 949, 114, 952, I think we exited, right? 114 to 110. When did we ideally exit? Stop loss exit if you wanted to take. 952 is when you exited. Okay. 949, 114 or 114.7, whatever. 952 you have exited. That is 110. The maximum you have lost is 4 rupees. This is the best advantage of this platform. Your stop losses are so short. Worst case scenario, you're only losing 4 points, 3 points, not more than that. But then when you get your entry right, maybe you will have 1 or 2 positions that basically hit your stop loss. That's okay. Look at 1001. The advantage with 1001 is when you take 1001, it has never hit your stop loss. You are basically getting at 122, and quickly you went to 180. Basically, you have made your 50%, 60 points something odd. Basically, you have made easily, right? The other advantage with this is when you take your position, you are most likely to make your profits in less than 15-20 minutes or maximum half an hour. In most cases, within 15-20 minutes, the move will be done. Why? Because you are not taking your entry. For example, you are not taking your entry here. You are not taking entry here. You are not taking entry here. You are taking your entry here. You're taking your entry exactly when the sell is slowing down. When the sell is slowed down, obviously the price has the freedom to move. Most of the time, you will make your money in the next 15-20 minutes. Now I'll explain this with other examples, obviously. Most of the times you have done with your trade within 15-20 minutes. All you have to do is analyze when this is slowing down and the candles come down, take your entry, 15-20 minutes, you're done and you're out of the market. You don't wait with your orders for too long. As a seller, you can, of course, that's, this market is yours. You can obviously hold it for as long as you like, as long as the lines are essentially growing. But as a buyer, you don't need to. 15-20 minutes, your majority of your trades will be done in 15-20 minutes. Worst case scenario, sometimes half an hour. Okay. I'll then show you some other scenarios where this actually means the whole world, for buyers. Let's say on 16th, recently when 16th, a lot of you people who are using the platform, or most of you already knew that 150 basically is your support zone. Okay, 150 was a massive support zone. We all knew that. Okay, how do we know that? What we did is on 15th July, end of the day, we took an analysis. Now, when we are looking at this chart, we knew that our resistance was 250 to 300. Our support was 100 to 150. That was our support zone. Our resistance zone was 250 to 300, end of the day. Now, end of the day, since these people have not liquidated their positions, we had more confidence that this is my support zone and this is my resistance zone. If they had liquidated their positions, we would probably not have support or we would not have resistance. We will analyze it either ways. Anyways, you people know how to analyze this. 250 to 300 is resistance, 100 to 150 has been our support. Next day when the market opened, unfortunately it did not open in the resistance zone, it opened slightly lower, but it quickly went to the support zone. We were at 150 to 100 zone, right? Now we wanted to buy. Now the problem for anybody is, when do we buy, right? Should I buy here? Should I buy here? Should I buy here? Should I buy here? It came back and again took a rejection. So should I buy here? It came back, took a rejection. Should I buy here? It came back. Then it went down. How many times will I hold my position? I don't know for how long I'll be able to hold my position. Towards the I'll get eventually through 2-3 bad positions. I'll get frustrated and I'll just leave, right? You don't know when to take your position. Although you know that this is a support, you don't know when exactly to get into the position, right? Now look at this with the new chart and see the kind of magic basically it does. So we knew that this is a support zone. We wanted to do a call buy. That is something that we already analyzed and the price was slowing down. So even that way also we were trying to see if we could actually take a call position. So what do? We go to 150. And then we'll say, I'm not interested in puts. I'll show candles. I'm not interested in puts. I'm interested in calls and I want to take a call position. Okay. First thing is I want to make sure that it is basically not growing, it is slowing down, which I think is evident from this line that it is essentially slowing down. And then this candle comes down. At 11:38, the candle comes down, nicely presenting me an opportunity to take an entry. My stop loss, since this is not too below this line, I am looking at the high of this candle as my stop loss. And I'm saying I'm taking an entry at 11:38. Okay. Look where 11:38 is. You're not taking entry at 9:35, 9:36, 9:37. All the dilemma is gone. As a buyer, you're no more guessing when to take the entry. You're taking an entry when calls have given up. The sellers have given up. Where is 11:38? 11:38 is here. You're still buying at the bottom. You're still literally buying at the bottom. But you are sure now that calls are giving up. So hence presents a good opportunity to me. Imagine how many trades it has already saved you and presented a place where you could easily get into it and you could have obviously made money, from that position. A spot where you have much better chances of succeeding compared to if you were taken any positions earlier. You knew it has support, but you wouldn't buy. Why? Because the sellers are essentially increasing, right? So you wouldn't take a buy position. You want them to slow down. You want sellers to run away. What better position to take it rather in beyond, let's say, or before 11:38? Now this is powerful. This is really, really powerful, right? You yourself know from the examples that I'm showing, and this is live. You know that whatever we tell you in the platform, everything works the same way in production as well. 11:38, if you had taken a position, look at call 11:38. Where did you get your position? 11:38. You've got your position at 64.65, let's say. You're not too far from the bottom. You're actually literally at the bottom. Nobody can give you a solution to buy exactly at the bottom, man. It is very difficult, right? Maybe at some point we may be able to crack it. I doubt it. I really doubt it that we will be able to get buy positions from here. And I don't want to. To be honest, I am not interested in looking at buying at this. I want to buy at the bottom somewhere. And what better than this? I'm literally getting my position at 65, literally at the bottom. And I told you, all you need is 15-20 minutes, right? Price immediately went to where it went to 95, came down, even if you had exited because of trailing stop loss. Now see the beauty. Price did go further up, right? Some of you may say, oh, I would have missed out opportunity. If the price is trending and if you're going up, this will present you more opportunities. Just look at it, right? So this is gone. You have taken one position. Now the line is still sliding. So if you miss out this opportunity also, somewhere when it came back, the line is sliding down still. And you have got another opportunity at 131, 132, you get another opportunity. Okay. So your first opportunity you got at the bottom, you made your profits. 132, you got another opportunity, which is at 90 rupees. It came down, but it did not hit your stop loss because the price, the volume just came down. So you don't have to worry. At 90 rupees, it came and it went to 120 rupees, another 30 points. From 60, we went to 95. Assume that you exited at 90, 88, 85, whatever, 20, 25 to 30 points. Again, you had another 25 to 30 points, about 50 points in just one day. And no anxiety, no guesswork. Just analyzing when the sell pressure is going down and if you are able to get an opportunity without having to worry, and you have not lost everything. See, if you had taken one trade from 65 to 120, 50, 55 points, you have taken two trades and you've got the same points. And without any anxiety saying, oh, I'm probably losing more, or, and neither are you losing a lot, anxiety of losing out. Nor have you lost your points actually. You've taken an entire trade just in two trades instead of taking in one trade. There are some days where you would actually get entries from here also. If you are good at this, right? You may be able to take entries from here also. Forget it. Even if you are not able to take, it's not like you want to take every single trade, right? You want good entries. You had one entry there and you had one entry here. Two good entries. Right? Now, this is basically again a game changer. Now there is another thing I want to basically show you. Now I understand that this is beautifully working, right? There are days when the market don't move, and I've shown you when it doesn't move, you are already in advantage. But there are days when the market doesn't move at all, right? What do we do on those days? And see the beauty of this. I'll just show you. Let's go to a day when the price did not move at all, sideways market. Right? Assume we ignore the morning noise and then the price comes to 10 o'clock, 10, 11 o'clock and all that. And the price is basically 25,450. Now we want to analyze 25,450 because that is the ATM strike. Do I want to go buy or call buy, put buy? What do I want to do? That is all that I'm analyzing. I want to show candles. Okay. Now look at this. If you remove the candles, when the supply is increasing for both of them, you don't want to take any position. On a sideways market, even if you look at the candles, even if you're looking at the candles, right, you will realize that call candles are above. You will also realize the put candles are also above the line. Both call and put candles, both of them are above the line. Right? See the beauty of the solution. You have not got fake entries. You don't have any fake entries. Call is slowing down and you get your entries at 12:18. You don't have entries in put. Call is slowing down and till about 12 o'clock or once it slows down, maybe here at 12:10 or at 12:18, 12:20, you have got your entries. Look at call. Okay, nothing is happening. 12:10, 12:20, you basically took your entry at 100. Maybe you made some money, and if you have exited at loss, or if exited at trailing SL, if you have hit and if you exited, that's okay. It goes down and it comes back. You've got another entry. Again, it is slowing down. You've got another entry somewhere here. You could have taken this entry also. It would have probably hit your stop loss. It has not hit your stop loss, maybe given you another 4 or 5 points. You have got another entry here. Either here, if you are not confident the line is still going up, another entry here. 247 at the end of the day. It is still at the bottom. 247 is much before the line basically went up. Again, 15-20 minutes, you've got your move. Even on a sideways market, you don't get your you don't get any false entries, right? And the previous example, if I take also, I think on 18th June, 18th itself. So for example, when we were analyzing, if the reversal will happen, 950, 24, 950 if we analyze, right? Let's look at put, thinking, will it further go down? We did not have a chance. Put was just going up. No, after 3 o'clock, I'm not going to look at anything, obviously, but it is going up. So I'm not taking any entries while the line is going up. Even if they come down, if the line is going up, I'm not taking any entries. I was also analyzing call. What happened to the call? See, call is slowing down. I've got an entry. Even if I don't take this, somewhere here I've got another entry, 141 or sometime like that. Now, because it fell so much, you are not able to understand the kind of positions we have got. So 131, 140, 141, somewhere here, 160, we've got a position. Didn't make much, 170, 10 rupees, 15 rupees is all that it basically it made that day, because the sell pressure was also very, very high. But you had your 5 or 10 rupees. There were entries where you could actually get at the bottom itself. For example, this one, if you look at it, right, 12:58 or 1 o'clock. Somewhere here. And that also went high. So somewhere 150, one of them actually I was tracking it. We were able to actually get an entry at 150-ish something, and it went to 160. But either ways, even if you had taken these entries, your loss would not have been much, because so this entry I have told you, right? This entry or this entry, for example, your stop loss is this candle, it has never hit. Your stop loss is this candle, it has not gone above that. You still had your chance to make your 5 or 10 rupees. Keep your SL right above that candle, because the candle is small. If it is too big a candle, if a candle is actually very big, if you are taking entries based on this candle, and if the candle is very big, okay, or if the candle is too big from top to bottom and it has come down, keep the line as your stop loss. So your stop loss is actually not too big. Worst case scenario, you're losing 3 or 4 points, 5 points. Sometimes actually this also will give you profit itself. I've seen entries where stop loss is hit, but I have exited at 1 rupee profit overall, 1.5 rupees profit overall. But even if you exit at loss also, it's not going to be 3 or 4 rupees, not more than that. But when you get your entries right, you obviously will make significant movements, 10 rupees, 15 rupees, 40, 50, like we have done on the put side, for example, on this day, or on the other day we have done it in 2 entries of call, for example, right? So this is what is the advantage. This is the new feature, and understand that this side, right? You have got it is difficult for you to analyze when you click on it and then see this. It is actually a little difficult. So you have got Nifty Strike View, another option in the menu, where you just add your entries here. For example, strikes that I'm interested to analyze is 25, 900, 950, and because in the morning price was up, these are the entries. You can, during the day, you can change it, obviously. Just add them, the buttons will get added here. In the morning, I was analyzing 25.50, so I'll click on this. My interest was put in the morning, so I'll remove this and I'm analyzing puts. Every minute, this will automatically refresh. This will not change. You will only be analyzing put. The ATM strike, you will always know here. As the strike changes, just click on that particular 25,000 and then you will analyze that particular strike. 24,950, you will analyze that strike. Right? Makes it easy for you to analyze the data. Like I said again, the analysis has to always happen at the ATM strike. If you are looking to take a put position, make sure you do it at ATM or one above that. If you are doing call, if you are expecting for call, analyze again the ATM strike or one strike below that. Okay, that is where you will get the early indication of reversals. Right? Awesome. So this is the feature that we essentially wanted to explain. I'll open up for questions and answers in case if you have any questions you have, we can obviously take it and discuss. So I'm done with my explanations, of course. So go ahead, please. Anyone? Yeah, Shivkumar Rajendran, go on, please.
Yeah, hi Patil. A very good feature, Just wanted to check that last one which you showed. How do you add this in the thing?
So all you do is, let's say you're somewhere here. You go to live chart and you go to Nifty Strike View. And then depending on where the strike is, You basically say 25,000 and you select this checkbox and then select one top, one above,
Okay, got it.
two top, one above, and the buttons are added. You just click on that and you will analyze and just keep clicking on the buttons. In case if 25,000 is too far, you don't want it anymore, you can remove it from here. 25, 2500, I'm not interested anymore. I'm actually interested in 850, for example. You can add them. During the day, anytime you can change this.
Got it. Got it. Thank you.
Yeah, no problem. Anyone else?
Hello,
So
sir.
this, so can I?
Yeah, Chandras, go on. Raise your hands, please, so that I can ask one of you one by one to, ask questions. Chandras, go on, please.
So this smooth line is a wonderful thing that you have introduced.
Thanks.
Now my question is, this smooth line is actually working like a, if you compare it with VWAP,
Mhm.
VWAP line.
Mhm.
Now you have suggested take the entries when the candles go down,
Correct.
whichever call or put. So I'm looking at both sides. No, I can take above the line also. Similarly, I can do the same strategy above the line also. When it touches the line and tends to go up, I can still take a position for the upside.
Yeah, so when it goes up,
Candles going up. The
no,
candles
hold on.
going up. Like you
For
take the
example,
candle. Yeah,
Chandras,
sorry.
for
Yeah,
example, this solution, right? It came down and
yeah,
then
yeah,
it is going up.
yeah,
So for which one we are analyzing? We are analyzing
yeah.
put.
Whichever,
Okay.
whichever.
So
It applies. The strategy applies to both. And
correct.
this smooth line works like a VWAP. So you
No.
take the entry when it goes down also. Similarly, you can strategize to take the entries when it goes, candles go up the line from bottom.
Yeah, so there are a few differences, stark differences, Chandrahas, and give me 2 minutes to explain you why you should not compare this with VWAP. Okay.
No, I'm not
First,
comparing this with VWAP. I am taking this smooth line as a
the
benchmark.
example. Understood, understood. So, but then understand one thing. When it comes down and then it is going up, you are a seller. You are selling put. You are not buying put. Remember that. Okay. The line is going up. You want to sell put. You cannot buy at this place. Of course, you can sell put. And that's another feature for sellers, of course. But if you want to buy, you can only buy when the line is slowing down and the line is coming down and candles are coming down. You can never buy this when the line is actually growing. Maybe somewhere here you had an opportunity to buy, but then it is too end of the day. I don't trust the data after, let's say, 2:45, 3 o'clock. It is very difficult to trust. So even if I lose an entry, I'm okay, right? When the candle comes down and then going up, I am a seller for that particular strike.
I'll buy a
I
call.
want to sell put.
I'll buy a call.
No, you can't buy put because
No,
supply.
I'm not. No, I'm saying looking at the put smooth line, when it goes up, I'll buy call.
So when it is basically from down, when it is going up, you are saying you will sell put and you will buy call. The problem with that approach is, at that point in time, maybe calls are also selling. They are trying to figure out whether call will give up or put will give up. So if you are a buyer, you cannot immediately take a call buy at this point in time. I've shown you
I can switch to the call line.
you can't.
It's just a click. It's just a click. No.
That's a problem. Hold on. I'll explain to you. That is the problem. I've explained it to you here. So for example, right, you could have made money as a put seller, as a call seller. But then you want to buy call, right? So puts are increasing. For example, 25, 150 only, I'll tell you. Okay, we'll take put example and you will know exactly why you cannot combine both of them at the same time. Put, for example, is going up somewhere here, 1050. So you can be a seller at 1050, say this is your stop loss and you keep selling. Okay. But look where your buy entry came at call. You can't buy at 1050. Why? At 1050, you are still here. It took easily another 15 minutes for you to take a call entry. And that call entry happened a little later and I'll show you there itself. Your put entry came slightly earlier, which is basically a put sell at 1049, 1050. Put sell you were able to sell either here or here. But call buy came to you. See, when did you get your call buy? You got your call buy at 11:38. A good 1 hour later, 45 minutes later, maybe.
Yes.
So you can't combine them at the same time because you would be on a losing side. Understand that it is possible in our market for both call and puts to lose money at the same time. Both calls and puts can lose money at the ATM strike at the same time. That's absolutely possible. Why? Because both of them, the supply is increasing. For both of them, supply is increasing. What will happen? As long as supply is there, the price will only fall. You want the supply to slow down if you are a buyer, only then you can buy. So you can't take both positions at the same time. You can be a seller.
But I can have a look at it, and only when it drops below the line, then I go for the position take.
Absolutely.
But because it is just a click here on the top, it is just a click here. Seconds, just 1 second, 2 seconds will take. I can have a look at it. At all, if it's going down, the candles are going down the smooth line, I can take the opposite position and profit from there also.
Absolutely, you can be a seller and a buyer of both. Why not?
Yeah. We can switch. We can switch on and off. Like.
Absolutely, you can do it.
Yeah.
I'll go to Atul. Atul Diokar, please.
Hello, can you listen me, sir?
I can hear you. Yes, Atul.
Okay. Sir, one suggestion and one humble request for you. I am starting with suggestion. Can we provide that chart of ATM in our first page? We are showing 4 charts there. Left hand side top, where you are showing left hand side top. Where you are saying buy and sell difference for Nifty future. Can we show ATM chart instead of that?
Okay, that's a suggestion. I'll answer. Then your question, please.
That is suggestion, and my request is that can we conduct a live webinar in live market?
Understood. So I'll answer. Done. So I'll answer both of your questions, Atul. So the first thing is, can you swap them at this moment? No, but we have got this request. It is already in our development cycle. We are thinking of allowing you to reorder these things as you wish. Now that is something that we are developing. As and when that feature gets rolled out, you will be able to drag and drop them and keep them whichever you want to analyze, and you can maybe hide some of them as well. If you only want to see this, maybe you have the option to only see that, and you can hide some of the options.
Instead of that.
Correct. You can arrange them whichever order you want, and you can hide some of them also if you want to. So that is a feature that we are building. You can of course look into that. And as and when it releases, we will announce you in Discord. Obviously, you can see that. The second part is a question that we have, we have been reluctant for a long time. Believe me, of all the people, I would love to go live. As early as possible. I want to go live and do analysis. Now the problem with that approach is, and as a company, the challenge that we have is, you understand that we are a brand. We are not just any YouTube influencer as such. We are a brand, and we have to survive a few years at least. The problem comes is, if you are going even 1%, if you are deviating from what NSE is asking you, or the kind of limitations NSE puts on you, as a brand, you are hampering the entire company. And because of that, we, as a company, there is, it is very difficult for us to do anything live, right? But what we are doing is, we have seen that some of the influencers are essentially willing to go live. Now, influencers are individuals. They are not looking at long-term brand. They are willing to go live. We have seen some of the influencers go live and explain the data based on 915 itself, which we are not stopping them, right? Although we tell them not to stream continuously, but there are influencers who are doing it, who are basically streaming, and they're explaining in different languages. That is the only thing available right now, Atul. As a platform, as a company, anybody associated with the company, they cannot unfortunately do anything live at this moment. The best thing I'm able to do it is give messages or put messages in Discord at times. Beyond that, it is very difficult for us as a company to really go live. I would love to, believe me, because I know that we will be able to get many more subscribers, a huge following we can build on YouTube and Instagram and all that. But unfortunately, that is something that is off limits for us right this moment.
Please keep updating that live chart.
Yeah, NSE cannot allow anybody, even influencers can't do it live. In fact, if you are educational purposes, if you are using data, you're only supposed to use it 3 months old data. You can't even use anything, recent. They can even hold as, if they see a video where in YouTube video where we are explaining anything earlier than 3 months. Many of our videos, if you observe, right, we are using January data. And YouTube, when you see our YouTube videos, most of the time we're actually explaining January, February data. We are not even explaining on June, July data. We are cautious on what we are putting in public platforms. Webinars like this, we are happy to basically do it because this is a closed forum, so not a problem. But anything we put live, we are using February, March data.
No problem, sir. Point taken. Thanks.
No problem. And I appreciate, all of you people understanding why we are not doing it. Believe me, I'll be the one who will gain the most if I'm going live as a company, and as the kind of subscriptions we can expect. Obviously, we can get significant number of subscriptions if we go live. But unfortunately, that's a limit that we will have to work with, at least at this moment. So let's see how things evolve going forward. Any other questions? Anyone else? Anyone messaged? Please share the recording of the session. Please send Discord. It will be available in Discord. We'll put it in Discord link of your channel. Ravi Kumar, the Discord link is there in website itself. If you go to the footer, in that you will see the Discord link. And yes, Ankur and Abhinav. Ankur, let's start with you, please.
Hello. Yes, sir.
Yes, Ankur. Yes, Ankur.
Actually, I joined late, so just I want to I want to know the changes what you are talking with, sir.
Ankur, unfortunately, I
short,
can't go over everything again. I've got another call right after this, but we have recorded this video. You're on Discord anyways.
Okay.
The Discord link is shared in message just now. Anybody who wants the Discord link, you can see the chart.
I will go
And,
through that. Okay.
We will post the recording in the Discord itself, so you can obviously play it and you can relook at that. And if you have any question, we will do another webinar. Ankur. There's a Hindi webinar in the evening. Same thing we will be explaining. If you want, you can join that again.
Okay, sir. Okay. I'll join.
Okay. Done. Abhinav, go on, please.
Yeah, am I audible?
Yes, loud and clear.
So Patil, I just wanted to ask you, does this new feature make some of the existing charts available on the website a little redundant, especially the first chart, which is the futures chart, which I don't think a lot of people actually use? And
Yeah,
the second question is, at what point do you, I mean, will we have a lot of these charts open at the same time, because you need to decide on a certain point at which you will take a trade, right? So once you're looking at the arc, which is the second chart, which is basically top right, that is the one chart that I used to follow. And now you have these individual strike charts. So does it make a little difficult for the user to actually pinpoint an entry point?
Absolutely. It is not going to be easy. I completely agree with your question. But then I want to ask questions where I can get relevant answers, Abhinav, right? Then the questions are, instead of looking at how many charts I have to follow and all that, the questions that I want to rather ask is, if I have to take a trade, right? There are a few things I need to know. First thing is, what is the overall bias in the market? For that, I need to follow the trend line for sure, the alpha arc in the trend line for sure. Okay, I need that open, because that gives me one easy way of analyzing which way the market is going. If it is slowing down, I can understand that, okay, the momentum has slowed down. Maybe I'll look for a reversal. Then I know I have to look for a call buy, and which strike I need to analyze becomes easy, right? The new feature I've told you, for me, it becomes easy to see there. If the trend line is just falling, I'm looking to take a put buy or call sell, then I know what is that I have to analyze based on that. So first question is, what in this platform can tell me the direction easily? So the trend line basically has to be there. Second question is, what in the platform can tell me whether the market is going sideways, and what is my range, right? If the platform can slide, how further can it slide? So that I can plan my trailing SL or I can plan my exits accordingly. For that, you need the fourth chart. So the second and the fourth chart becomes impossible to remove. I know that you have got the first and the the third chart, which is just candles of Nifty spot. Those two you may want to ignore, but the other two charts becomes impossible to remove, because these are the questions I can't get answers from anywhere else, right? Sideways market, I need the fourth chart. Range, I need the fourth chart. The direction and the intensity with which the market is going, in whichever direction it is going, I definitely need the trend line. If these three questions are answered, how do I get exact entry? For that, then I will need to look at the new chart that I have told you. The problem we had seen was, irrespective of the four charts that we had, a lot of people were still struggling with entries. We had to look for something that could help us give a much better entry. As you have seen in the demo today, right? You would have missed out on some of these entries if we had not had this particular feature. So I'm saying to time your entries, look at the new charts. In another window, you can just open in a new tab and you can leave it. One laptop, I think, is still good enough. But if you want to know the direction and what the price is essentially doing, for that we still need the dashboard that we have been using so far, because we can also see if the price is slowing down or if the trend line is slowing down, etc. So that is why we need the dashboard still. Future chart, like you said, a lot of people are still not using it. So I'm maybe we will add that feature quickly where you can hide or you can enable and see which charts you are interested to see. At that point in time, maybe you can decide to maybe hide it. But time being, we can't remove them because there are some people who go by that. And believe me, there are people who have come up with insights wherein if the future sell is high and the trend line is negative, you will get good movements. If the futures data, options data, and trend line, if they all are in sync, you will get good movements. And that is something that you cannot deny, right? So hence we need to keep them still there. Yeah.
Understood. Thank you.
No problem. Chandrahas, I think you have another question. Chandrahas Naik, do you have a question? You're on mute, Mr. Chandrahas.
I'm sorry. So I was saying that the smooth line that you introduced today looks quite wonderful. My question is, this smooth line, can we backtest this? Can we check with the historical data?
Of course.
You're allowing that?
Yeah, of course. You can click on the bars. You don't get a separate window for that. But on the historical, if you click on the fourth chart, no, you get to see that obviously. You can, of course, look at the historical data, obviously.
No, what I'm asking is the particular ATM strike, the smooth line that you have introduced today. And when you're saying that when it drops down, you can take an entry. Can we check that in historical data?
Yes, this is 16th July. On 16th July, the reversal happens at 150. I'm clicking on 150. For the 150 strike, I'm trying to look at call buy. This is all historical.
Yeah, so many days I can go and check this. How many times it has happened?
Of course.
So how long can I check history? How back can I go in time?
Yeah, so well, luckily we still have January data. We have been deciding whether to remove January data because we want to keep the platform a little fast. And God knows when we will be able to take. We always wanted to keep only 3 months of data. Luckily, because it has not slowed down, we still have January data. So I think you can go back till January. At least time being, you can definitely see till January.
Yeah. And you were saying just now that the second chart, that is top right, and the candles chart, that is left down. I was about to ask this question, but you answered that before itself, that both are identical. They're looking identical, and there is no time lag, so that you look at the top right one and immediately decide to take a position on the left top and the candles chart, the price action chart. There is hardly any time lag. So, I mean, it is literally carbon copy. So there is no time left for you to take the position because it has happened and then it is showing.
I doubt I understood your question, but then let me explain. The second chart and the fourth chart are the most critical parts of the platform. The second chart is telling you the direction, the trend line, and also it helps you in trailing stop loss. Okay, because if the line is falling, if you are in put buy, you can just keep going as long as the line goes. Or you're in call sell also, you can keep going as long as the line goes. So it helps you in trailing stop loss. It helps you in identifying the direction easily. The fourth chart helps you identify the range as to where is the next big support or where is the next big resistance is, right? These are the questions and also fourth chart helps you understanding if the price is going in a tight range, right? If it is going in a sideways. These are the questions no other chart can answer. These are the questions you can only get answered with the second chart and the fourth chart.
Can I intervene?
Huh.
So the second chart, that is right top, the arc thing which you are saying, and the price chart, that is left down. left bottom, the price chart, where we take the position. They look identical. They look identical.
They look identical.
They look identical. So looking at the second chart, I have to take a position in the third chart. I'm not talking about the fourth chart at all.
Understood.
So when I have to take an entry, which you are addressing today, that entry becomes difficult. So many participants have reported it. When I look at the second and the third chart, they're literally carbon copy. So looking at the second chart, I can't initiate a position in the third chart where I have to take a position, literally position, because they look identical. So looking at the second chart, I can't take a position because it has already happened here. It has happened here also.
Yeah, there is a way to understand this, Chandras. Okay. One thing is what you have said that they are carbon copy. I'll take it as a compliment because this is purely volume based. Okay. This is not price. This is completely based on volume. And if you are telling me it is a carbon copy of the price, it is a huge compliment, to be honest.
No, why I'm saying, sir,
let me, Chandra, sorry, let me complete.
Sorry.
I'll let me ask you further questions. The other thing I'm saying is, a lot of us use this to identify the direction in which the price is going. If this line is growing and if the black line is above this blue line, it means the buyer momentum is increasing. That means I can either be a put seller or I can be a call buyer. If this is sliding down, it means that our price is essentially going to go down because volume is essentially going down. So the price should also go down. And if this black line is below this, I know for sure that price is going down or volumes are going down. So ideally it should go down. So when you say that, okay, this is a carbon copy of this, when you can take an entry, there are two, three answers to that. First thing is if the direction is up, you cannot, even by mistake, you cannot take a put buy here. If this is looking up, you will only take a call buy. So it has eliminated half of your wrong entries right there. Okay. And then when to take your entry, I'll finish in 1 minute.
Yeah.
And based on that, when to take an entry, now we have told you there is a new chart. Based on that, you can time your entries perfectly. But the direction itself, you will basically know from here. For example, I'll give you another answer, right? There are days when the market is going down, price has slowed down, but the trend line is still falling. You will not want to look for a call buy opportunity. You will want to look for a further put buy opportunities because price has a chance to slide further. That no other chart will tell you. The volume chart is falling consistently. The price has taken a little bit of halt or it is taking a little bit of a reversal, but volume is saying it will go further down. On times like that, you want to take a put buy. You don't want to take a call buy. The only guy in all these charts will tell you is this volume chart, or rather this trend line chart. Those are the things you will get much better clarity from the trend line. So the value of the trend line is immense. You have to go back to historical data, see on multiple times. I don't remember the days. I can open and show you with examples. If you go back, you will also see examples. On days when the price is falling or the price is rising, the price tries to do a pullback, but volume keeps going up. That tells you saying that the pullback that is happening is only a fake and the price will go back further in that direction. So you're looking for a call buy entries. You're not looking for a put entries just because price is going down. Those are the things that you will understand much easily from a trend line. That is the reason why this has a huge value compared to what the price is, price itself, to be honest. Hope I answered your question, Chandras.
Okay.
Yeah, Atul, go on, please.
Sir, please keep the same dashboard. Please look at the right top and left top. One side
Right.
alpha line chart and other side left side Nifty and sale volume. Alpha line keep rising. This means market is going up. Plus
Going up,
still
correct.
on left hand side upper side, red line is still above blue line. Means seller are more aggressive. But this chart is showing another thing.
Correct. So the problem with this chart is, Atul, when you look at it, this is purely the reason why we have the diff line. You tell me now what is happening.
Okay.
When you look at it like this, that is the reason, precisely the reason we have diff line. When you look at it like this, you think sellers are more. But look at diff line and tell me what is happening. It becomes difficult. For a human being, it becomes difficult. That is the reason why we have a diff line. Just because sellers are at the top does not mean they are selling more. They sold at one point. That is why they are at high. Who is actually selling more? It is the buyers who are basically placing more orders than sellers. Okay. That is why it is important to see the diff line, or you know how to analyze this. All right, we are at 12 o'clock now. Any other question, please? Anyone else? Last question I can take, and maybe we can wind it up. Okay, awesome. I hope that you understood, the feature. I hope you are able to follow. I hope this adds immense value to your trading, to your arsenal and to your trading journey. And wishing you guys once again, best of luck. And we will keep doing these webinars as we launch new features, and we'll keep doing classes. There is a Hindi webinar in the evening. In case if you didn't understand anything, you can obviously join that. And for any other questions, anyways, we have Discord, so you can post on Discord. So thank you so much. You guys have a great day, a good Sunday, and happy weekend.
Thank you.
Thanks. Bye.